Well, we've been talking a lot about how these bank seizures and collapses are one way for the Federal Reserve to usher in CBDCs, that is central bank digital currency. But a lot of people have been asking, what exactly is a central bank digital currency? So I figured now would be a good time to sort of break this down. So essentially, central bank digital currency is a way for an individual to begin banking with the Federal Reserve. So right now, the Federal Reserve has no individual accounts. They don't have, they work with just businesses and governments, but you cannot open up a bank account with the Federal Reserve. Central bank digital currency would change that. It's a way for them to open up an account essentially with you as an individual, and you would bank almost directly with the Federal Reserve. Now, they say that they're still going to have some intermediaries. The banks would, of course, still exist, that maybe your account would be held with Chase or Citibank or something, but it would essentially still be your money is held directly with the Federal Reserve. They're saying it is not crypto. The biggest thing to understand is the difference between cryptocurrency and central bank digital currency is crypto is not centralized and central bank digital currency is. It would be regulated, centralized by the Federal Reserve, I should say, not the government, the Federal Reserve. There's a difference. And it's different from crypto. Crypto is a decentralized digital currency, and central bank digital currency would be centralized digital currency. Now, the Federal Reserve has been openly and actively exploring this as an option. There are some countries that are already in the testing phases of CBDCs for their own nations. The Federal Reserve actually announced back in November that there would be a 12-week test pilot program that they're going to be rolling out with certain banks like Citi, US Bank, Wells Fargo, amongst others. So they're already in the testing phases for CBDC. This isn't just like a theory or a conspiracy theory. This is a real thing that the Federal Reserve is already talking about, that they're already testing, that they have, they've got a lot of information out there about why they'd even want to be doing this. And we're going to go over some of that. But first of all, when you go to the Federal Reserve's website, they actually have a page on their website. Here it is. You can look at this central bank digital currency. They say here, while the Federal Reserve has made no decision on whether to pursue or implement a central bank digital currency, or CBDC, we have been exploring the potential benefits and risks of CBDCs from a variety of angles, including through technological research and experimentation. Our key focus is on whether and how a CBDC could improve on an already safe and efficient U.S. domestic payments system. CBDC is generally defined as a digital liability of a central bank that is widely available to the general public. Today in the United States, Federal Reserve notes, which is physical currency, are the only types of central bank money available to the general public. Like existing forms of money, a CBDC would enable the general public to make digital payments. As a liability of the Federal Reserve, however, a CBDC would be the safest digital asset available to the general public with no associated credit or liquidity risk. And that's really what we're seeing here now with all of these banks potentially collapsing, some of them actually collapsing. Credit Suisse nearly collapsed. You know, they're saying today that Credit Suisse is in big trouble, and then another bank swooped in and said, okay, we'll provide liquidity when you need it to prevent you from going under. What the Federal Reserve is saying and what people are starting to feel, and this is why I believe a lot of this is manufactured crises in order to get people to want central bank digital currencies. Because what they're saying is, look, rather than having a bank that you go to, you put your money in, and then they take some of your money or most of your money actually, and they lend it out or they buy treasury bonds or whatever they do with it. And then when you want your money, and if too many of you want it at the same time, you're not going to be able to get it. It's a run on the bank. Suddenly the bank collapses, and then you find out, oh no, I only am insured for $250,000 of my money. If you happen to be a business, that's a real giant problem. $250,000 is not a lot when you're a business for operating expenses. If you have like 30 employees, maybe you manufacture some kind of tech device, you're going to need a lot more money than $250,000 in your bank account to make payroll, to pay your bills for manufacturing, to pay your overhead. It's not a lot when you're a business. And it's the same, you know, whether you're an individual or a business, that $250,000 insurance, which is what many people have been talking about lately with the collapse of SVB. Federal Reserve says, well, you wouldn't have to worry about that Because when you bank with us, you're banking with the central bank, and they never have a liquidity crisis. Well, why does the Federal Reserve never have a liquidity crisis? Because they're the ones who print the money. They, essentially print it. And in this case, they would be, because digital currency would be digital. So all they'd have to do is just digitally create it. And they would never run out of money. There would never be liquidity issues. And so that's why they're saying this would be the safest place for you to bank. It would be the safest money you can have. But of course, this comes with major implications about privacy and control, and that is the biggest issue with CBDCs. But let's go over some of the things that the Federal Reserve says. They made this big 40-page PDF document that you can get from that link on that site from Federal Reserve. You can then get to this 40-page document that explores why they're wanting to roll out these CBDCs. And they kind of have this pros and cons thing of it, but there's very few cons. It's all pros, right? They're trying to talk you into wanting this. The first thing they say is it's inclusive. We want to move to a digital currency because it's inclusive. This is where it gets funny. Now, a lot of people wonder, what is the difference between a CBDC and just using your card? Right now, you have a debit card from the bank. You use that everywhere you go, or maybe you use Apple Pay or Zelle or Cash App or Venmo, and you're making digital transactions all the time. But those are based on the actual paper money. So you could go to the bank, you could get your paper money, and then you could also pay in cash. Digital currencies would essentially replace those actual physical paper money, and you would be paying everything digitally instead. And there might be these other mechanisms still, like Venmo, Zelle, all of the debit cards to use your digital currency, but your currency is now digital. So you wouldn't go to the bank, and you would never go to the bank and say, I would like, $200 in 20s, please. Like, it just would never happen. So they say, well, we want to do this because it's inclusive. They use this term to make you want to get it. They say that digital financial services and commercial bank money have become more accessible over time, and increasing numbers of Americans have opened and maintained bank accounts. Nonetheless, more than 7 million, or over 5% of U.S. households, remain unbanked. So that's what it's inclusive because some people in America don't have bank accounts. Well, maybe they don't even want bank accounts. There's a lot of people who don't want banks. They see what's going on. They don't want to put their money in a bank. But they're saying, but it's inclusive to go and be part of a bank. Okay, says you. I mean, I guess any business could say, well, we want more inclusivity. So we need all the customers in the world, not just part of the customers. We need every customer in order to be inclusive. That's what they're saying. They said here in this document that it's safer and it's not prone to liquidity crisis, like what we've been seeing. I've just mentioned this. They say, as a liability of the Federal Reserve, however, a CBDC would not require mechanisms like deposit insurance to maintain public confidence, nor would a CBDC depend on backing by an underlying asset pool to maintain its value. A CBDC would be the safest digital asset available to the general public with no associated credit or liquidity risk. They say it will protect the U.S. dollar. So this is where it gets really interesting. They're pretty open. They'll tell us the truth when you ask. And, and you always just have to open your eyes and pay attention. The truth is always in front of you, right? They even say in this document, well, it'll protect the U.S. dollar as the global reserve currency. So this is what they want. So they understand there's a risk that the U.S. dollar is going to be replaced. And they say, well, if we roll out CBDCs, then this could protect the dollar as that global reserve currency. And this could be why they're doing it so rapidly and they're just really wanting to march towards us, and why they're aggressively going to want us to get towards this very quickly, especially as things ramp up with China and Russia. They're going to aggressively try to ramp us onto CBDCs. And here's why. They say another potential benefit of a U.S. issued CBDC could be to preserve the dominant international role of the U.S. dollar. The dollar is the world's most widely used currency for payments and investments. It also serves as the world's reserve currency. The dollar's international role benefits the United States by, among other things, lowering transaction and borrowing costs for U.S. households, businesses, and government. The dollar's international role also allows the United States to influence standards for the global monetary system. Today, the dollar is widely used across the globe because of the depth and liquidity of U.S. financial markets, the size and openness of the U.S. economy, and international trust in U.S. institutions and rule of law. It is important, however, to consider the implications of a potential future state in which many foreign countries and currency unions may have introduced their own CBDCs. Some have suggested that if these new CBDCs were more attractive than existing forms of the U.S. dollar, so paper currency. Global use of the dollar could decrease, and a U.S. CBDC might help preserve the international role of the dollar. So they're essentially saying, and what they're not saying too is, and we're afraid of crypto. You know, they might as well throw that in there. They're saying, oh, well, we're afraid of these other digital currencies. If it's easy to use these other digital currencies, then the dollar, the paper dollar, might no longer be attractive. So we've got to roll this out in order to protect U.S. dollar hegemony around the world. So they're pretty open about that. And that's why I'm telling you they're going to be very aggressive about rolling it out, because they absolutely do not want the U.S. dollar to become less than in the world, on the world stage. They say in this document, don't worry about privacy, okay? Privacy protected. Protecting consumer privacy is critical. Any CBDC would need to strike an appropriate balance, however, between safeguarding the privacy rights of consumers and affording the transparency necessary to deter criminal activity. That right there is the kicker. That is why right there so many of us are pushing back against this, saying, who do you determine to be a criminal? Because we saw what you did in Canada, calling the trucker convoys criminals. We saw that you called unvaccinated people criminals, essentially. You're wanting to label parents at school board meetings criminals. You wanted to label a lot of different people criminals. We see the people of January 6th that were just protesting outside, the people that never even entered the building. You call them terrorists. So the idea of who's a criminal shifts and changes depending on who's in power, and we don't trust it. We don't trust it. And so we don't trust that they're going to be, and then what do they mean by deterring criminal activity? So they're not going to allow you access to your money if they determine that you are a criminal. And that is the exact problem with CBDCs. Because everybody's a criminal to the government if you're pushing back against the government. And if they can control your money, they can control you. And that is the absolute purpose of this. Now, of course, the Federal Reserve is going to do everything that it can to make you want CBDCs. That will be the end goal. They realize it is not a popular idea, that many of us are very against it. We don't want this. I prefer my paper money. I can go and I can pay for things anonymously if I want to, without being tracked, traced, or being told I'm not allowed because I've got the wrong opinions. But they're going to make this to where people want it. And these bank closures that we're seeing one by one, people are beginning to wonder. And the Federal Reserve is even putting out there, oh, they're asking us, can we open up a bank account with you? In fact, they tweeted this yesterday as a Federal Reserve FAQ. Here's what they tweeted. Does the Federal Reserve maintain accounts for individuals? Can individuals use such accounts to pay bills and get money? No, the Federal Reserve Bank provides financial services to banks and governmental entities only. So they're acting like this. They tweeted this yesterday. They're acting like people are really wanting this. They're asking the Federal Reserve this question. They want to know, can I open up a bank account with you because you're the safest bank out there? So they're already trying to groom us into wanting these CBDCs by telling us we're the safest bank, and we know it, and you know it, and you're going to want it because your bank is going to maybe collapse. You're going to lose everything of no fault of yours. You know, you as the depositor, you put your money in the bank, you thought it was safe. Oh, silly you for not knowing that there was a $250,000 insurance limit, or being a business where $250,000 is nothing for the business that you're trying to operate. You should be punished. And so you should lose all your money unless you bank with the Federal Reserve. So they're going to get everybody to want this. And the way they're going to do that is by allowing banks to go under one by one, scaring us. These crypto banks are gone. They're making people wonder, oh, what am I going to do with my crypto? They're trying to collapse that market while at the same time consolidating all of these small banks to the big banks. And those big banks are the Federal Reserve. Citibank, JP Morgan Chase, they are the Federal Reserve. They're the ones that have they're the shareholders of the Federal Reserve. And they would be the ones that we would be banking with, and it would be their currency that we're banking, that we spend. So that is what we're looking at. That is what a central bank digital currency is. It is replacing actual paper money with not a crypto, because that's decentralized. Instead, it's digital currency, very similar, but it's centralized, it's controlled. They're watching us. That's what they even tell us. They're going to make sure that it's transparent enough to deter that criminal activity. And that's the biggest issue with it. You will not have your privacy. They will control the money and they will control you.